Well, hi, friends. Chris Kelly here. It is late in the week. Time to talk a little bit about what's going on in the wide world of real estate, lending, and all that goes with it. So let's let's jump right in. I'll minimize the screen. We'll take a quick look at the market activity, and I kind of want to speak to this. When we get through the data, I got some comments on this as usual. All in all, I mean, this section I don't tend to talk about as much, but it's very telling. I mean, there's a lot less happening this week versus last week and versus this time last year. A lot less. I mean, whenever I say you get well into double digits, it's not in and of itself a cause for alarm unless there's a bunch of weeks of it. And that hasn't been the case yet, but that was something that just it stuck out to me in looking at this. Just way fewer sales, just way fewer listings. Again, this time of year, it's not entirely surprising. When you string together a month of that, then you're going, okay, what's going on here? The pace of the market, which is this line here, the pace of the market has remained pretty consistent, right? Versus last year and versus pre-COVID, right? So that's not an inappropriate pace of the market at all. It only felt weird when you came off of this and came to this. I mean, you can kind of see we went from this to this anomaly back to this, right? But now we've been at this market pace for long enough that it's not entirely surprising. The median average sales price, I mean, it's higher than this time last year. We've talked about that. Pricing kind of dipped and then recovered, and in some cases recovered and then some. So it just depends on price point and where you're at in the metropolitan area. So this is what I want to. So I guess all in all, it's not dismal by any means. It's January. That's what happens. But here's what I want to talk about, because it's almost like there's a lag. In fact, it's not almost, there always is. So, for a long time, people were doomsday predicting, and then things started getting better. And then people were like, hey, things are getting better. And maybe saying that more so than it actually is. I'm not saying this just to be contrarian by any stretch, but I like to look at data and try to understand what's going on so that I can convey it accurately to you, to those who are going to listen to what I have to say. And I often post an article, so I'm going to post this one. It's a very short read, but it says, mortgage demand surges more than 10% as lower interest rates lure home buyers. Now, you guys know, if you watch what I put out, that I talk to my lender relationships really regularly. And I typically ask, hey, what's going on right now? What's money look like? What's government money, FHA, VA money look like? What's conventional conforming money look like? Just assuming certain things. And so what I've been told is that money's been kind of staying the course. Every week I've had this conversation, and for the past this calendar year, and maybe a little bit and then some, money kind of got down and has kind of leveled off. Well, mortgage demand surges more than 10% as lower interest rates lure home buyers. I don't know. I don't see that exactly accurate as a brand new article. Where did it say it in here? Applications for a mortgage to purchase a home rose 9% for the week, but were 20% lower than the same week a year ago, which that plays out in the data that I just looked at. I would say we're probably lower than that. Mortgage rates were about a 0.5 percentage point higher 1 year ago. Buyers, however, appear, I said that right. Buyers, however, appeared to be enticed by the recent drop in rates. Well, that, when I read that, if I'm the, John Q. public, I might think, wow, rates just dropped. That's not what happened. And that's often what happens in business, in my business, in the real estate space. What's happened by the time the public knows what happened, we're kind of somewhere else already. And in this case, we're not really somewhere else. It's just that interest rate adjustment already happened. And it's been that way now. But it's like the public's hearing it finally in the headlines. You know, as a society, we're kind of news clip and headlines type of folks. And so by the time that becomes the norm, it's usually been the case. So if things get bad, the world may not fully internalize that until it's been bad for a bit, and vice versa. So I just think that lag time is interesting, and it's worth noting. That's why, I mean, we live in the information age. It should be easier to get real-time information than ever in human history. And it is. But we're all busy and have busy lives, and so nobody's diving into that. And that's why people watch the things they watch. That's why people watch stuff like what I'm doing, and I watch stuff that other people are doing, because I'm trying to get real-time what's going on information. You know, by the time the talking heads are spewing it, it's probably been the case, or it's no longer the case, whatever it is. So all in all, but it's because this is the other interesting, I guess, dichotomy is most of the people that I'm talking to in the industry have come out of the gates this year busy. They're all feeling busy. If they're not physically listing and selling and closing things yet, they feel busy like that's happening. And we're no different. We're plenty busy for a January, especially in what numerically appears to be a difficult market. But how is that possible? So again, I think that's a little bit of lag time playing out. What is going to happen versus what is. You know, the numbers that I put out are what is, right? That's what is the numbers. That's what happened this week. So I think we're going to see activity continue to rise, even if it hasn't quite yet. So not trying to be Pollyanna, not trying to blow sunshine for people, but I'm just telling you, as a person in the industry, what I'm talking to people about sometimes differs from the numbers. You shouldn't disregard numbers. I don't put them out every week by accident or just for the heck of it. But I think it's important to note that you can kind of get a feel for what's going on in the market. In my case, the real estate market. And sometimes it doesn't always exactly coincide in the moment with the numbers. That's all. So anyway, all that to say, we are here for you and yours. And we're busy. And we're here and we're hustling and we're working hard. So if there's things that need answered, if there's questions that need answered, if there's decisions that need made, we're here to help you make them. And we're here to give you the best possible input and advice that we can so that you and yours can get from where you are to where you want to be. So if there's anything we can be doing to help, please don't hesitate to reach out. And with that, I'm going to call it a night. And as I always say, till the next time.